In the Bitcoin treasury boom, you might want to pick the fastest horse to bet on. But here's the problem, raw speed is meaningless if you don't adjust for the drag. A company might show headline Bitcoin per share growth, but if it's just trading at a massive premium to its actual Bitcoin holdings, that growth could just be multiple expansion in disguise. So, how do we cut through the noise? I'm introducing a new metric, torque adjusted Bitcoin yield, or TBY, a valuation tool that asks, how much Bitcoin is a company compounding per unit of valuation froth? TBY is a performance efficiency ratio. It compares a company's Bitcoin per share growth against how expensive the stock is relative to its actual Bitcoin holdings. In plain English, TBY tells you how much real Bitcoin per share growth a company is generating for each unit of premium you're paying. Here's the formula, step by step, explained in plain text. TBY equals Bitcoin per share growth divided by the MNAV multiple. Let's break that down. First, the Bitcoin per share growth. This is the ratio of how much Bitcoin each share represents today divided by how much it represented at the start of your measurement period. For example, if a company had 100 sats per share in January and it has 250 sats per share today, then Bitcoin per share growth equals 250 divided by 100 equals 2.5x, or 150% growth. This measures pure accumulation efficiency, how much more Bitcoin each share now entitles you to. Number 2 is the MNAV. This is the company's market cap divided by the Bitcoin net asset value. Put another way, if a company holds $100 million worth of Bitcoin, but the equity is trading at a $400 million market cap, then the MNAV multiple is 4. This tells you how much premium investors are paying above the value of the actual Bitcoin held. TBY equals growth divided by premium. So if the company grew its Bitcoin per share by 2.5x and it trades at an MNAV of 4, then TBY equals 2.5 divided by 4, and that equals 0.625. This means for every 1 unit of valuation premium, you're getting 0.625 units of real Bitcoin per share torque. The higher this number, the better. A high TBY means the company is compounding hard money per share efficiently, even if the stock trades at a frothy premium. A low TBY means most of the action is just hype or dilution, not real accumulation. Here's how to calculate the TBY for any company, no fancy software needed. For step 1, you're going to pull the raw data. You're going to get the following info, the total Bitcoin on the balance sheet, so think the latest 10K investor update or a treasury dashboard. Then you need the total fully diluted shares, and you're also going to need the spot Bitcoin price at the same timestamp you use to check the market cap. And then you just plug it right in. It's a simple division problem. Boom, you now know how many Satoshis the management team is capturing per unit of market premium. Let's look at some real examples. As you can see, the blockchain group is the runaway torque monster, ringing 3.25 units of SAT compounding for every unit of valuation froth. Its tiny stack, 620 Bitcoin, keeps the MNAV moderates while new raises turbocharge per share accretion. Semler slips into a respectable second place, a modest 22% Bitcoin per share lift, but against a near par 1.17 MNAV premium, delivers a TBY of 1.05. Proof the ATM for Bitcoin flywheel is working without overheating the multiple. MSTR still compounds, but aggressive share issuance plus its scale means per share torque lags stack growth. At a TBY of 0.6, you're mostly paying for macro beta and the brand's optionality. Metaplanet has rocketed in price this month. The same 189 Bitcoin yield now sits under a 5x multiple, dragging TBY to 0.55. Execution has not slowed, the valuation has simply outrun it for now. This is how you read the TBY scale. A TBY value of greater than 2 means hyper-efficient Bitcoin compounding. Investor action, strong buy. This is rare and structurally sound. A TBY value of 0.5 to 2 means there's some good yield, but some premium is priced in. You might want to accumulate selectively and monitor future dilution. And a TBY value of less than 0.5, well, it's frothy, momentum-driven, Bitcoin per share draggy. Bitcoin per share is useful, but it doesn't tell you how efficiently that growth was earned. Bitcoin per share equals direction, MNAV equals the steepness of the hill, and the TBY is the speed adjusted for the incline. TBY is a slope-adjusted Bitcoin torque. It shows you who is actually folding space-time on the cap table. High TBY firms don't just buy Bitcoin, they build gravitational wells. Every sat that they add deepens that well. Eventually, the valuation premium collapses into more Bitcoin per share, and the compounding hits escape velocity. That's how black hole balance sheets are born. And when that happens, the flywheel feeds itself. If you want to bet on the fastest horse, don't just chase growth, track the torque. The market always catches up.